Good weekend, all. I'm Epstein, and here we are with your metal market wrap-up, and this is your weekend edition for this Friday, the 12th of April, 2024. Well, gold survived big time this week, all right? Traders, if they bought today, they probably got their butt kicked. Why today? Can't answer that question other than if you look with me, you got as high today, intraday is 24.48. You came down and made new lows late in the day. You were attacking the lows of the day here. So that was important. Silver did from 28.53. I know it was getting near the $28 mark the last I looked. Remember, settlements at 12.30. The market was breaking after that. Look at copper, 436. Finishing there, and it was lower than that, I was looking, and even the same in the platinum. You had a little bit for everybody. At the beginning of the day, traders are buying Israel and Iran are going to go to war. I got to be in the market. Things are going to go. CPI doesn't matter, high interest rates, because it's already been through the PPI, CPI. So that was the mentality there. Now the question is, does reason hit the Iranians, or do they just want blood and go after Israel? If they do, the word that I would be tied to is the president used the word the U.S. stands in an ironclad manner next to Israel. I don't believe Biden for 1 second, unfortunately. He says one thing. I learned that in his energy policies, which, by the way, they've canceled all purchases for the strategic reserve, and rightly so. The price got away from them. But it's squirrely. I don't know. Saying one thing and doing another to actually put U.S. forces attacking ground in Iran, do you honestly think we would do that? We'll find out if, and this is the big word, if Iran directly launches drones, missiles, whatever they've got from their own land at Israel. The more likely event is if they do something. And by the way, time's on their side. They've got the world guessing. They are the ones, like a yo-yo. They're putting it down. They're taking it up when I used to play as a kid. And they're the one dangling it, and they'll decide time, place, whatever. So the markets today, traders got absolutely decimated. They bought. You're still up on the day, but understand what happened there. So that's pretty darn important. When you look at the gold market, you see you got all the way up here. And on a monthly close, understand we're looking at weekly charts. This is a new high close. That's powerful. You're up 6% so far for the month. There's only 2 weeks gone in this month so far. On a weekly basis, you added another 1.3%. Not the stellar peak you hit today. You got up today to 24.29, and then you gave that up. But forget that. The trend is up still. There's nothing here that isn't up. Higher lows, higher highs. You're well over the 18-week average of closes, which, by the way, is moving to the tune each week of about $20. Let me see that, 2106, and then we come back here. Whoops, let me get you back here. 2086, and the week before that, 2072. So let's call it 20, because it's another up week. It'll be $18 to $20 at least on the moving average, but that's still going to be well under the last break low. That's all my importance is. Where did the market run into the buzzsaw? Why did it stop up there? That's a big question. It wasn't the Bollinger Band. It's over the band, and it's been over the band for a while here. So whatever it was, I can't answer. Normally I could say, it ran into that Bollinger Band and that's it. That's not the case here. In this case, you just keep running over that market and you're not embedded. It's an overbought market that is being run by geopolitics. For this particular phase, it shook off a hot CPI. It didn't care about a cooler CPI the day after, and the market just keeps running to the upside. So what the market's looking at is the inflation cycle in the world isn't broken. That's what it is in part. Number two, with the dollar super strong, people are wondering, where do I put my money because my currency's getting hit? And one portable method, cryptos. One portable method, gold. I'm not saying they can't be investing in treasury instruments, stock markets, but those are the other parts. And suddenly gold is alive. Are central banks buying gold? Yeah. Do they have as much gold as they had at the last peak of inflation? No. They're well underinvested if you look at the World Gold Council and you take a look at who owns what and where they're at. So there could be more to it, but I'll stick with what I teach. Buying over a Bollinger Band, the one time it works, it suckers you in, but they build Vegas off people that buy over and sell under. More times than not, you peak out against that number and you have to play with it accordingly. In the gold-silver ratio, silver is stronger than gold right now. Well, that's a combination of many things. First, today, what happened is the Biden administration is giving the U.S., they gave a date, no more aluminum, no more copper, no more this, that, whatever from Russia. So because of the war, more sanctions going on, and we're not going to be buying. I don't know how much we do buy from them. Number two, you're looking at in the copper mines. Copper is very important here. Silver is a byproduct in many areas of copper mining. As you look at it, you've got basically shortages. Number three, and this is important, the cuts in interest rates by other central banks will be bullish for industrial metals. What they're trying to do when they start cutting rates is to reinvigorate their economies. And the way you do that, metals come back into play in that. As you can see in the silver, it broke out of this sideways action. Almost, when you go to a weekly chart, a 1 year of sideways action. So the pullbacks within the Bollinger Band, I think, long-term are going to be bought in this market. I was looking for 30. I'm going to have to take a look and see what my numbers could come out to because it got today to my objective. And I told you that during the week. In the copper market, here too, you're at 4.25. I thought that was an objective. I had that in mind and 30 in silver long term. I'm already there, or the market's already there, and you're overbought in the market a bit. In the platinum, this is the big resistance point. Now you're at the first challenge of the 200-day average in the Bollinger Band. That's the one I understand. That's why the resistance is coming in there. But the market is going to look at this if it breaks out of this sideways action like silver, that you've broken out of a long-term base that began almost 8 months ago with sideways action. And if it really can come out of that over the next a couple of weeks, bingo, watch out, can go a lot higher. Excuse me there. So you put this all together, you're just looking at my other screens, and you see what you've got. You can see the dollar index up today, 76 points. So that still metals up. Yeah, it weighs on it because typically higher interest rates and a higher dollar hurts the metal market and hurts everything priced in it. I don't know if anybody watched coffee prices swing today in cocoa. It was nuts. All right, just totally nuts as everything was being bought. And late in the day, just like in the metals, the energies, market started selling off. And wow, it got pretty crazy very fast. All right, I put together my new charting course. This is the brand new one. It's 45 new chapters. So there's nothing from my old courses that I brought back in and reintroduced. Swing lines, moving averages, stochastics, Bollinger Bands, window envelopes. Each chapter gets taught to you in the way that I like to teach. And I take you in, I start you off with what you just saw there, PowerPoints, but you'll have chapters on each one. Now, by my design, the slow stochastics and the Bollinger Bands are taught separate in these. And then in the enhanced Bollinger Band course, I bring you into the embedded world. So this gets you to where you should be before you take those courses. I show examples, but the real examples come because the charting course uses the everyday example. Anybody can go in, write a paper, and cherry pick what they want to show you. And that's a nice way to learn for some things. But it's so much easier when I do that and cherry pick it on a PowerPoint and then bring you into the real world of what's happening as it's happening with all of these in the morning subscriber videos. So included in the course is the free charting software. It looks like this. It'll have much more studies. This is just showing you the Bollinger Band example on it. There'll be much more on here. Again, You get the charting software. By the way, that's $160 a month value. That's thrown into the course. 30-day trial to all my research, written along with the morning subscriber video and the the Spider ETF video thrown in. Those values are another $76 a month if you were to take them all. So you put that together with that, and I'm giving a 10% discount inauguration fee because this is the kickoff of it. You go to iraepstein.com and you go to the word education. It's there. You can move your cursor up here. And the 10% discount when you go to buy it is included. You'll see the retail price. You'll see we slashed it off and away you go. It's just an inaugural price. After that, it goes right back up to where it was. So if you're interested in learning, that's how it works. When you buy it, it doesn't activate the course. You decide when you want to activate the course, and that's when the research and the charting service gets turned on. And once you buy it, just go into your member login, you play a chapter, it gets going. By the second chapter, you'll see it all begins for you. The first chapter, get my pretty face and explain how the whole course works. I'm Ira. You have yourself a great weekend, and I will catch up with all of you on Monday morning. Take care now.